We're here with Jason Brewer, Executive Director of Continental Coal, an ASX-listed South African thermal coal producer. Now, Jason, could you just give us an outline of your portfolio for Continental Coal?
Sure, Sandra. Continental currently has 2 mines in production in South Africa. It has a series of 9 other development projects, which we hope to bring into production between now and 2015.
Was that 9?
9.
I'll keep you busy.
Look, there's a lot to do. We've got a very strong team in place there in South Africa, 30 strong in the head office, and with all the necessary skills to bring these mines into production and get our production rate up from the current 2 million tonnes to a targeted 10 million tonnes by 2015.
Okay, so that's some target. Now, your projects are located within South Africa's central Basin coalfields. Can you give us some explanation of the significance of this area?
Sure. It's a region an hour's drive east of Johannesburg and then continues for a further 2 to 3 hours. It produces the majority of the coal in South Africa, some 80% of production and 75% of their coal reserves. We're surrounded by, I think, another 60 coal mines producing north of 80 to 90 million tonnes of coal. So a very significant coal mining region. Been producing for almost 100 years. So very well established infrastructure, both roads, rail, but also a very strong community that's clearly seen the benefits from the mining of the coal in that region. So an excellent address to be in, and one which we targeted as where we really wanted to be. Okay,
could you just give us a bit more idea about the different types of coal projects you have and the type of coal that you're able to produce or will produce?
Sure. From the 2 mines which we're producing at the moment, the first one is Fontaine. That's producing about 1.2 million tonnes of coal a year. And that's a domestic quality coal, a very low energy content coal, which is sold to the local utility company, which is Eskom. From the other mine, which is Ferreira, you're producing a 2-product coal there. It's an export product, which goes through to Richards Bay, which is the world's largest coal dedicated export terminal. And you're also producing a lower quality domestic coal, which again goes to Eskom. When you look at the balance of the portfolio through the other 9 projects, you've probably got an equal split of 50-50 of that domestic quality coal and the higher value export coal.
Yeah. So now you have over 500 million tonnes of coal resource. What are the chances of an increase on this?
Oh, look, there's a strong likelihood that that'll increase certainly before our end of financial year, which is 30 June. With the recent acquisition of a private South African company, Mashala Resources, they had an exploration division which had 6 drill rigs with them. We've already put them into the field, and we certainly expect on a number of our projects to both increase the resources, both by tonnage, but also increase the confidence as well. So moving them up from a current inferred, a large proportion is in that inferred category, up to the measured, and also we'll be putting out a reserve statement as well. So very excited about what we can actually achieve there. And of course, that's just on the existing portfolio. There's a lot more consolidation opportunities for us in the region, acquisition, mergers possibly with some of the other companies. So now we hope to get that significantly higher.
So you've also got a lot of partners who've been excited, and you've been very successful in forming partnerships in 2010. So could you give us some idea of the significance of these partnerships?
Yeah, we made a strategic decision very early on that we wanted to be associated with some serious world players in both the export and sale of the coal, and also some parties that could come in and assist us with being able to fund our growth profile, which as you've seen is quite significant. So in July of this year, and again in September, we announced a deal with EDF, which is the big power utility here in Europe, and with their trading business. They've agreed to take the offtake from our export focus mines, and we've actually done the first 2 shipments to them this month. So that's, again, another big tick in the box for us. And they've also agreed to prepay up to $20 million on that coal offtake. So again, they're actually giving us funding to allow us to take forward these projects. The biggest sign, I guess, of confidence that we can have is them agreeing to that, because they're a very focused company, and whilst they take 33% of the coal out of South Africa already, they've never really done the sort of investment that they have done with us. The other announcement, which we made on Monday this week, was with the Korean government's exploration and mining group, which is called KORES. We had an asset which was Best way to describe it, because it was very much early stage, was just out on the periphery. There was an additional fee which was required to complete the acquisition of that, and we'd decided that our funding should go very much into the new mines we just acquired. And the Korean government have essentially, through KORES, paid that final instalment to take a 37% interest in the project, and will fund it with us through to a bankable feasibility study. So again, another sign that Continental's growing and getting the support of some major players.
Yeah, and a lot of activity going on. Now, you've recently commenced production at Fontaine. Can you let us know how much you're producing and what are the chances are of an increase?
We got that mine up into production within 12 months. It's been a great success story for us. So the first production was in May of this year. We're targeting 100,000 tonnes per month of domestic quality coal. We achieved that nameplate target within the second month, and we've subsequently done that again last month. So the 100,000 tonnes is very much achievable. We've demonstrated that. Going forward, we're barely 5-6 months into a 10-year operation. We've opened up the mine. We're accessing both seams of coal, each seam being 5 metres thick. So a very straightforward, conventional open cast operation. So there is the opportunity to increase that. We've demonstrated we can beat that target. We certainly expect. So I think best to say in the new year we'll see how it's progressing.
And so how can you describe the strength that Continental Coal has in being able to get these projects up and running and to be able to form the partnerships that you have?
Look, I think it comes down to the management team we have in South Africa. We've been very fortunate. Don Turvey, our Chief Executive Officer, joined in May again of this year. He's a former BHP Billiton coalman, coal for the best part of all of his career, 27 years in coal. He's come in and has been very instrumental in driving the company forward, focused on project execution, project delivery. Behind him, through the acquisition of Mashala and through Continental's own management, we've got Johan Haystack, who worked with Don at BHP and was the CEO of Mashala Resources as well. So you've got the band back together there, I suppose, is the way of describing it. And you've got a 30-strong team in Joburg, which is really focused on delivering results. And look, to date, they've done well. Let's not rest on our laurels. We've got a lot more to do.
True.
But no, we're excited. We've already started on our third mine development at Penumbra. Contractors will be on site in February doing some of the civil works, but we're already out tendering for that. And we'll have first coal there within 9 to 12 months. So again, that's what they're focused on delivering.
You know, with regards to your, your margins, with how much accuracy can you sort of predict those margins?
Look, the South African coal sector and industry is, as we said, very well established. Been operating for the best part of 100 years there. So we've got a fair understanding of what our costs will be and are at the current operations. So when you look at something like our new mine at Penumbra, which we're producing within 9 to 12 months, you've got a total cost there to get to the port at Richards Bay of anywhere between $50 and $60 a tonne, and you're selling it at the moment, Richards Bay prices about $105, $106 a tonne. So you're making some substantial margins there, $40 to $50 a tonne. On the existing Fontaine mine, because that's a domestic product, obviously the pricing is a lot lower, but you're still making anywhere from $5 to $8 a tonne. Of free cash flow at the end of the day. So,
and going forward, you can.
Going forward, look, I think the cost base is very, very sound. We understand it. The mines, we're not doing anything different to what's already been undertaken next door. I mean, like I say, if you look at our location of each of those mines, there's another 60 operating coal mines in and around us. So we're not trying to make it complicated. Coal mining's hard enough as it is. So we're very confident with the sort of cash flow projections we've got internally, and I think when you look at the production profile, you work it out for yourself, I suppose. I think, we're confident by 2012, where I think Don's already come out and said, Don Turvey's come out and said, a 7 million tonne run of mine target. With the mix between your export and your domestic coal, there, you're well north of 50 to 75 million US of free cash flow a year, and that's potentially 12, 18 months away. So. A very good growth profile, and I think when people start seeing the results in our production stats and cash flow statements, I think
they'll be quite pleased, some happy investors.
Very much, very much.
And so, talking about investors, you're looking to list in, Q1 2011 on AIM. Can you give us an idea of, why you've decided to do that?
Look, I think we've decided, given the location of the company's principal assets in South Africa, given the support that the London market has shown to us already, and we completed a very successful capital raising here in London in September of this year. Got some very good institutions on board and supporting us in what we're looking at doing. The London market supports African mine development. They understand it, they're in the same time zone and have historically performed very well. So the AIM listing was one which we're very keen to progress. That'll be done concurrently with the JSE, a Johannesburg Stock Exchange listing. So there's a lot of work to be done to get that there. So that late Q1 next year is the target. We like AIM. We know a number of companies on AIM that have performed exceptionally well.
And you expect that you'll have good liquidity?
I think if you look at the liquidity we have in Australia, where we average anywhere from 40 to 50 million shares traded daily, we're certainly one of the most liquid stocks in Australia. And I think you get that when you've got a good story. We certainly have in our minds.
And for the next 6 months, what can investors expect?
A lot of news, without a doubt. A lot of mine development, a lot of some positive statements in regards to our production stats and cash flow. You'll see very shortly that we'll officially announce the start of work at Penumbra with the contractors on site, and that's a 280 million rand capital cost development that we're proposing there. So that's a very significant one for us. You'll hear about the feasibility study which we're completing on our De Wittekrans mine, where we hope to be able to make a development decision in June of next year. You've got obviously production profile out of Vlak, which we expect to increase above that 100,000 tonne a month. And clearly with coal prices going where they're at, the sort of earnings which we'll be reporting in our half yearly, which comes out in January, and the next two quarterlies, there'll be a lot of positive news there.
Thank you very much, Jason, and we'll be watching Continental Coal.